After many years of working, everybody expects to have some savings, which for the employed is usually in the form of retiring dividends. However, the main question which keeps lingering in the minds of many is whether it is possible to comfortably retire from dividends. Well, keep watching this video and we'll tell you exactly how. There are so many factors which come into play in understanding whether retiring from dividends will guarantee a comfortable life or not. One such parameter is your cost of living. For instance, in terms of residence. If you are living in your own home, which perhaps you have completed repayment of mortgages, then dividends can somehow be of great help. They can cater for the relatively smaller expenses compared to the individual having mortgages to pay. The truth is, whether you will live comfortably or not after retiring depends on your monthly payments. Look at areas in which you can cut on costs before retirement to maintain the lowest possible living expenses. This may require you to pay off some debts, such as mortgages or loans beforehand. This could involve constricting your spending over the years, leading to retirement. Investing early can also be your best bet if you want to live comfortably in retirement. If you get started early, you are depending on the compounding of the dividends being earned between initial investment and the time for retirement. If you have dividend stocks that yield 3% and you have invested about $100,000 share, a 3% dividend would grow to $3,000 in profits. Better yet, the company you have decided to invest in may choose to increase their dividends payment. Even if the amount remains the same, you still have a 3% yield from the money that you originally invested plus the new income. The point is, if you have enough time to build your investment, these compounding offers you a fantastic cushion for your retirement. The company to invest in is another factor to consider before deciding to invest in the retirement plan. Those who choose to invest in a company that has a history of consistent and cumulative dividends payments across different divisions and payment levels are likely to sleep at peace after retiring. Dividend income increment is directly linked to the essential performance and cash flows of the underlying companies. Notably, consistent increases illustrate management's capital allocation discipline and a commitment to payout to shareholders. The longer the history of business, the better its propensity to return cash to stakeholders. Investors in such companies have more assuring and comfortable retirement time. However, as you may know, past performance is not necessarily indicative of future outcomes. Therefore, it is quite important also to consider eliminating firms with payment ratios surpassing their historical means. These companies do not generate succinct free cash flows to cater to their total dividend expenditures and over-levered balance sheets. To live off dividends earning after retirement can be tricky. Retirees who have invested must first pay close attention to their spending or cut off the urge to purchase only extremely high growth stocks to try and match their high and unsustainable spending living costs. The amount of money that one needs to invest in dividends is different for everyone. So, to determine the actual amount of money that you can pay, you need to evaluate how much your lifestyle costs. This is going to be different for different people based on family size, whether someone is living alone or with a family, and the geographical location, as things cost differently in different areas. Besides, one will also be required to consider their future expenses, such as health insurance, mortgages, or buying off a home. To make sure that you invest the right amount, it will be vital that you set a retirement budget. The budget should be as realistic as possible about the actual amount that you want to invest in. If you're going to dine out and travel a lot, like regularly, you may need to spend a higher amount than someone content with staying at home and sustaining a fitted food budget. The more you will need to live on, the less likely your dividends income will not be sufficient. If your main aim is to live off dividends in retirement, the best thing that you can do is raise your income. The extra income can then be diverted towards having a dividend investment portfolio. There are many ways you can increase your revenue, but having a side hustle or getting a promotion may offer the extra income. Your capability to raise your income while within the working age will depend on several numbers that you may or may not be able to control. Such include the economy, specific job, and the demand for your talent. Presently, the 10-year Treasury bond is below 2%. The average dividend earning from stocks is between 1.5% and 2%. Hence, if you have $1 million and are gaining 2% interest per annum, you would be living off a dividend of $20,000 per annum. Truthfully speaking, most people cannot live off such an amount. Thus, while it is a noble thought to use the dividends as your retirement income and never touch the principal, one might need to invest a considerable investment portfolio in attaining that. Using the total return approach, you may realize that you can live off dividends and a little of the capital earnings. This is what most experts call the 4% rule. A moderate investment would have an average of 7%. So if you have a $1 million portfolio and you use the 4% dividend from your investment portfolio, you have a chance to spend $40,000 per year in an annual adjusted retirement earning. Yes, you are using some capital gains, but if one is averaging 7% per year and withdrawing only 4%, that still leaves 3%, which has the potential to grow. This should help make up for inflation over different market seasons. This practical example demonstrates that dividends can assist in fueling a healthy and viable retirement. While each individual reaches a different conclusion and investment choice, the common goal for all is to maintain a reasonable life in retirement, live comfortably, and not outlive the savings. Unsurprisingly, it is evident that investing in dividends can help in attaining each of these objectives. Retirement dividends income offers cash flow without putting a strain on the individual trying to figure out the assets to sell and when to make a sale. While most people may want to pay attention to the market's price instability and how it may affect their withdrawal amounts, experts think it's wrong. Yes, it is hard to look at the market price volatility and not worry. But that's just a minor thing that should be the least of your worries. The focus should be on identifying safe dividends payouts. As long as there is no decline in the dividends, earnings keep coming in, despite the market's behavior. Another benefit of the dividends plan in retirement is that many businesses increase their investment portfolio over time, assisting in offsetting the impacts of inflation. An average dividend of 2% can generate a profit of the S&P 500, where some of the income is paid out to shareholders as cash flow. At the same time, the rest is reinvested in the company to ensure continuous growth in the future. Dividends, therefore, come in as income, and the company continues to increase in value, building more equity for stakeholders. Besides, living off dividends in retirement offers an opportunity to increase its income every year. For instance, if a business pays out 4% of its share price averagely, if the share price increases over the years, a reliable dividend business will likely increase their dividends to maintain at 4%. Practically, if the start price is $100 with bonuses of 4% over time, if the price increases to $200, the profits are likely to rise to 8%. This is reasonable for any healthy business. The same can be observed for a fund of stocks. The S&P 500 usually has mean dividends of about 2%, if the market rises over a long time. The profits also grow with it, leaving retirees with a hefty and stable paycheck without having to sell their stock to fund their cost of living. In a report by Wall Street Journal, over the past 50 years, the S&P 500's investment portfolio grew at a mean of 5.7% per annum, exceeding the mean 4.1 inflation rate. This is just an example of how the dividends plan works and demonstrate that retirees who rely on a meaningful expanse of dividend income are likely to be in an excellent position to safeguard their buying power with the appropriate dividend stock. Moreover, investing in a dividend plan preserves and raises your principal over long periods. Unlike some other plans, such as annuities and withdrawal ones, this allows you to leave a legacy for your offspring or charities. Investing in dividends will allow you to have the flexibility of a lifetime. You can choose to sell off your assets if you need to finance a unique retirement event or activity, or offset unforeseen dividend earning cuts. Typically, paying taxes is not an enjoyable thing for any taxpayer. Therefore, being offered a tax-free income is a game changer for taxpayers. Most of your dividends will qualify as tax-exempt if you are within 15% of the lower tax bracket. Virtually all the US dividends qualify within this tax bracket. Again, for international funds, about half to two-thirds of your investment portfolio will be qualified. Dividends can thus be a sweet way to invest for your retirement lifestyle, as you could potentially enjoy a reasonably high income, yet pay a federal income of zero. No one likes emergencies, but with dividends, a retiree can ask for additional financing source in case of an emergency. You can comfortably consider your dividends to cater for the emergency bills. Practically, at a 2% income, a moderate portfolio of $100 can produce $2,000 of dividend earning yearly. You may be amazed at how such an income would come in handy to help you out with just a few clicks. Most importantly, retirees who have invested in dividends plan tend to improve their psychological being. While in retirement, you may worry excessively about how to cover your daily or monthly expenses and selling in a down market. This may affect the mental health of a retiree who may be worked up trying to figure out what to sell, who to sell to, when to, and whether to go back to work. However, with dividends, retirees can worry less and can enjoy their bonuses until old age. Dividends keep on coming both in good and in bad market times. If you have a higher investment portfolio profit than the withdrawal rate, you will still have the income to fund your expenses. Having a large part of your overheads automatically covered by dividends can make it less painful. Indeed, planning for your retirement can feel quite daunting. There are so many decisions to make, based on the quality of expectations and personal objectives. These desires will require a wise decision of asset allocation, and hence, there is no need to rush. With every step and decision, make sure you consult the experts and ask questions where necessary. Again, do a thorough review of the investment plan, flexibility, yields, and the fine print of the business you are considering investing. Although dividends investment can be difficult, it offers an opportunity for regular growth and a cushion against inflation. Remember that your main goal is to meet a regular cash flow, as this is your ticket to living comfortably after retirement. Having dividends cover for your bills after retirement without having to work again is a real likelihood for anyone. Invest while you still can and watch your principal investment pay up for your expenses in retirement.